with interest rates sitting at a 23-year high, with inflation cooling and a labor market that's starting to show weakness, the time has come. Will it be a 0.25 or will it be a 0.5 cut? Or is this going to be just a one-time cut in September, or are we entering a rate cutting cycle? Time has come to adjust policy. That is the signal the Fed gave at Jackson Hole the other day, with interest rates sitting at a 23-year high, with inflation cooling and a labor market that's starting to show weakness. The time has come. So let's deep dive into this economic conference. Let's talk about it. Now, before we get started, let me just say that if you like content like this, leave me a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The Jackson Hole meeting is the premier central banking conference of the year. It's a time where central bankers get together, they discuss economic and central bank policy moving forward. And this one was particularly interesting because for months now, it has been widely expected, or it's been talked about, that the Fed is going to be cutting interest rates. Now, after this meeting, after Jay Powell's comments, it is all but pretty much confirmed that interest rates will be cut. The Fed said the time has come, and this signals that a rate cut is coming in September. Now, markets responded very favorably to this, as you would expect. The Dow jumped by a couple hundred points, the S&P and the NASDAQ, everything moved in a positive direction after Jackson Hole. And in all honesty, the comments that the Fed made at Jackson Hole was, again, it was everything that I expected it to be. They have been saying kind of for months now that if information or data kind of starts to show certain things, that rate cuts will be appropriate. Well, inflation has been cooling. It is down to about 3%, 2.9%. Unemployment in the labor market is starting to show weakness. You have that unemployment tick from 4.1 to 4.3. You have the jobless claims and different things that are just, you're starting to see a crack in that side of things. And the Federal Reserve has made it clear that they are confident that inflation is going towards or heading towards that 2% target of theirs. They have also noted that they see a weakness in the labor market, and they do not want to see it get any weaker than it already is. So this idea of a rate cut, and it wasn't just Jerome Powell that made the comments. Other members of the Fed as well made similar comments. They collectively feel it's not just, when Jay comes and speaks, obviously he's the one that gets the headlines, but other members of the Fed as well have been hinting at this for a while. And I think all the data just kind of we're kind of at like a perfect point for that pivot, for that shift. The stock market is doing good. We're thankfully not in a recession and not going through a very tough time right now. And inflation is starting to be more controlled and back to what I would say normal, I guess, 2-3%. But that labor market is starting to, kind of, when the numbers come out every month, why are the unemployment numbers going up? Why is it month after month, little more? The consumer spending report, even though last month it was kind of pretty good, but before that it wasn't. So it's, just kind of things that the economy and the data is showing us that things are kind of slowing down a little bit. A rate cut will be a welcome thing for businesses. At that point, easy money or cheaper money will be available. They'll obviously take advantage of that, which can lead to more jobs, more money in people's pockets, and just kind of get things spinning in the right direction. I think that where we are right now from an economic standpoint, it's kind of the perfect time to pivot without too much pain being felt. Other central banks are also sending signals that they will be heading in a similar direction. The United Kingdom comes to mind recently. They were talking about, rate cuts, and they feel in their economic cycle that it's appropriate. South Korea has recently made similar comments all over Europe. I just think that this is the point in time that we are at. Inflation is finally coming down from that whole mess that was COVID, and people getting free money and not enough factories up, and the whole mess, not to mention the medical, the death, all of that, but the economic mess that was COVID. We are like finally out of it, on the other side of inflation. And at this point, with interest rates being at 2 decade highs, and it's kind of nice to see them there for a little while. Higher interest rates while the economy is still kind of firing on all cylinders. It goes to show, the country can run without like near 0% interest rates. That kind of shows a certain health in the economy. But now with that little cool down, it might be time, if we want to keep the ship going, kind of cut rates. And the bigger questions come up is, will it be a 0.25 or will it be a 0.5 cut? Or is this going to be just a one-time cut in September, or are we entering a rate cutting cycle? The Fed hasn't really hinted at if it will be a cycle. The idea of a rate cut in September has been discussed. And in all honesty, I think that 0.5 is a little bit too aggressive based off of everything that we see. I know when the stock market kind of went down and those labor numbers first came out, you had people, they need to go big, and you had people saying that, but I think a 0.5 is just a little too aggressive. It kind of maybe sends a message of recession and things like. I think a 0.25 is the appropriate, not 0.5, 0.25 is the appropriate thing. Introduce a rate cut and then just kind of see how the economy responds to it. And as far as entering a rate cutting cycle, or if it's a one-time thing, let's see what the data shows us. Instead of trying to cut rates on a continual basis, no, let's cut them the one time and see what it does to the labor market and other things, and then just kind of decide from there. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.